From the first day when you will enter trading at the financial market, you will hear a lot about support and resistance lines. This is the key levels at the price chart when the price tend to stop, pause, or do the reversal movement. Lots of the traders, analytics, YouTubers, bloggers using these support and resistance lines in their educational materials, analytics like predictions, and even someone in the real trading. Because it's easy to understand, it's almost working everywhere, and this is the basic of the classical technical analysis. But at the same time, it's delivering lots of uncertainty. How to build these like support and resistance lines in the proper way, how to trade it, then where to put the stop loss and the take profit, and is it really working? And you know guys, my opinion and my vision interpretation, it's totally different in comparison with the classical. Why I think that my interpretation it's more logical, objective, and why it's really working, this is what I want to show you in our today's video, and by the way I will prove it for you. So stay tuned until the end and let's start. So guys, let us go direct to the chart because I want to show you the classical way of placement, support and resistance lines. In front of us we can see the gold on the time frame 1 hour, and the first point that I disagree as I'm comparing my own way of implementation like support and resistance lines in comparison with the classical way, that here for us the most important this is the current price. We are not paying attention on the current market trend. And everything that will be higher to the market price, it will be resistant levels. In the books and in the videos of popular YouTubers, they are saying it's like a ceiling to the price. So like for example here we don't have enough like buyer power to break this level, so every time we can trade opposite, you know, to this price movement when it's like touching and bouncing our resistant line. In everything that it will be lower to the current price and we have a few touches, we can call it support lines. Again, few touches. What does it mean touches? It's like touches by the tilt, touches by the candle, so candle supposed to close like lower this line. Some people saying in the books and even in the YouTube they are saying supposed to be 2 touches, some people saying like 3 touches, some people saying like touches from the opposite side. And again, as I'm looking right now on the chart, I'm even asking you, you know, I'm 13 years in the trading and I still don't understand. Should I put this line here? Because, you know, there was a lot of the touches. So my opinion, and you know, if you know me, if you're watching my YouTube channel, you know that I hate this uncertain point, and trading, I can call it trading by eye. What I can see in the chart, I can see, yes, this is like a line, but this is not giving me exact point and it will not give me the constants in trading. Of course, I know that you are watching lots of the traders on the trading view, they're drawing 55,000 of the lines, and some of the times, like sometimes it will touch and they will show, see, this was the nice point of opening position. They're not even showing the real trades, they just like showing these lines of the stop loss and the take profit. But as we are talking about real trading, it will not help you in the real trading. And I really like the phrase that market is not respecting exact line. That's why my vision, this is zones. You need to put support zone. So let me show you what is my vision about that. So what is my vision and why I think that zones is way more better? The first of all, I'm not recommending you to look at the resistant lines at all. Maybe it will be shocking for you, but I will explain you why. What is the logic of whole zones? We want to trade it. Drawing 55,000 line without trading, there is no point. It's losing the sense of whole trading, you know? So my idea, first of all, identify the trend, build the proper support zone to the trend, and wait until the moment we'll have when the price will do the correction, touch our supporting zone, and from it we will open a position. So we will trade correction following the trend. Let me show you a simple example by drawing, by giving you 2 examples. So for example, we have our trend, we identify by ABC trading method because this is the following, as we are diving deeper to the ABC trading concept, this is the following strategy, and I will show you right now how it's working, not just by drawing, but in example in the bot. So we have a trend, then we are waiting for the correction, we have a correction, and for example breaking of this level. We will fix the size measure the size of this correction, and when the price will do the movement 100% of this distance. So for example, if here will be 50 points, we need, after breaking of this level, if the price made the same from this side to this side, this 50 points, we can consider creating, we will take the high and the low of the correction and we will draw it as the zone. This will be our zone, supporting zone to our current trend up with the sell trend, because first for us very important to identify here start new trend up. The same here, we have A, B, C, then we have correction and breaking of this correction. We start measuring the size, the highest point of the correction with the lowest point. For example, in the current trend, we have a breaking of this level, and when this move, this one, for example, will reach this point, 100% of the correction, we will draw again. It will be supporting zone to our trend. Why are we drawing these things? Because we want to trade correction. There is no point to enter position here if we want to open, for example, sell, because price is already down. We need to trade from correction by following the trend. So we will wait until the price will do two ways, two options. It's calling zone in, or second one in zone out. How to understand which one to trade? First of all, we will get answers through the backtest. And the second point, what is very important, it depends on the volatility of the instrument. If the instrument is high volatility, better to trade zone out. If the instrument is low volatility, better to trade in. Let's go to the chart. Like for example here, we can see the clear correction against the current trend. So the current trend, let me zoom, it's visible. Yes, it was the trend is going up. Then we can see the breaking of the level. Right now we're not doing anything. Why? Because it wasn't movement of 100%. There was no movement like 100% of this difference. So for example here we can see, yes, it was 100%, so it's becoming for us this zone as the correction zone, support zone to the current trend. And here if we'll trade, like for example, support level in, zone in, we can easily open our position buy. But you know guys, again, this is 2025 and no need to do all this kind of drawing and calculation, because maybe you might think, how I will count, that will be like more than 100% of this distance. That's why I'm telling you, take this indicator. In ABC trading indicator, we already implement, so you can see the narrow, which is showing you the starting point of the trend, and every time it will draw for you the closest supporting zone. So for example, let me show you more instrument. We will open market watch and let's for me the showing you pound. You see, so for the pound we also have, and even it was the touch already, you see, so we have already our like the closest supporting zone that we can use in our trading. Also, for example, let me show you the Bitcoin. It will draw it right now. Yes, and we can see here, you see, we have supporting zone from which we can open supporting zone to our current trend. So if as we have trend is going down, when it will touch the zone, maybe it will be creating new trends. So that's why we need to pay every time our attention to the trend. But when, if for example, nothing will change and it will go up here, what we will do, we will open our sell. But is it working or no? Let me prove it to you by showing you results of the backtest. Long time ago I already told you that story. So when I came in this market, to this market in 2013, I was getting all information about trading from the books. And some of the books, especially Bollinger Bands, in that period of time for me was something like amazing, and I really found something special, and I'll be the million in the next like 6 months. But then when I start trading on the real account, found some things is not working. And then when I get some possibility to do the backtest about this strategy, I found that it's not working at all. So that's why every time when I'm showing you the logic of opening position, I'm implementing this to the indicator, and later on I'll show you backtest. as the proof that it's really working. And we'll do right now is the same. So let's go direct to the MetaTrader. I will remind you one more time how it will look like the trading. So for example, we can have a trend. So we have a trend is down, and we can see like the arrow that identifies for us the trend is down. Profit was taken there if, for example, we were trading in the beginning of the trend, but here this is the correction in or correction out we can trade. So this is the first option how we can open position, and the second option we can call it correction out when it's breaking this support zone, support to the current trend zone. We can call it correction break or correction out. Of course, correction in will be more active for the trades, but at the same time will be more risky. So let me show you the gold, because every time, almost in every video, we are looking at the gold view strategy tester. Gold from the beginning of 2024, this is almost 1 year, $500, it's correct. But let me upload one settings because I want to show you. See, no open by trend create, so we are not opening position at the beginning. We are not opening by continuous the trend by impulse, no weak line. Open by correction in with the starting volume of 0.02, and let's do the quick back test to see exactly how it's working. And as you can see, it's already working in plus, and plus, by the way, is not bad. Let us finish the back test. So our result, $991 after 1 year of trading. Total trades 136, with the maximum drawdown just $170, which is not bad at all. And let me show you another way. You see, the same gold, everything is the same. Just we can see, just I did some optimization with the stop loss and the take profit. Of course, it cannot be the same, but open by correction break. So it will open a position, you know, in this current situation, when we can call it correction was deeper, boosted one, you know, or whatever you want to say that. But we can do the same back test, the same 0.02 from $500, and let's check the result. Most probably he will be less trades, like around 100 trades, not more, because, you know, there might be the situation that in this case will be already ABC and creation of the new trend. But as we can see, it's working in plus, and plus $567. Total trades 92, with the maximum drawdown or almost is the same, $170. But having an ability to trade, for example, 2 different options with one instrument, giving you some things of optimization, you know. So that's why I want to show you that both option is working. So this is it, guys. If you are trading, of course, with support and resistance line, I will be happy to see your thoughts, to read your thoughts in the comment section. But I hope that you understood my logic, why I'm using these kind of things, and I really prove you that it's really working. Thank you very much for watching this video. Don't forget to subscribe to the channel, because we are coming to the most interesting part in our ABC trading concept course. We will do lots of the back test, optimization, and to find out what is the entry points is really the best, how to create a portfolio of the different kind of entry points, and how to make really good money. Thanks for watching this video, and see you in our next ones.